Hey guys, good afternoon. It's Angelo Christian Financial. Thank you so much for watching our Real Estate Insider podcast, where America goes for funding for the last 20 years. I really appreciate you guys watching the show and the channel today. We've been doing this for over 20 years, guys, helping America to get the best funding for commercial and residential loans. If you see the number up above, call or text us at 832-431-6331, or you can click on the link in the YouTube channel to get signed up now to get pre-approved. Today, what we're actually talking about is non-QM loans versus conventional loans. One of the biggest things that's changed in the last 5 years is the non-QM loan has actually emerged and becoming one of the top dogs in the lending arena. For the past decades, conventional loans have dominated the marketplace and had some of the highest market share. But as we've seen employment shifting for a lot of people in America, you see a lot of people, they don't qualify for conventional loans any longer, right? Because they have different odd jobs, they have different side gigs, they work for Uber, they work for Lyft, they work for, they deliver pizza, whatever. They have their own business, they have their own gig, they do something online. And that doesn't really work for conforming loans. So the non-qualified mortgage is something that's really emerged and come out of the woodwork in the last 5 years and starting to really grow. And it's a loan program that we specialize in. Today we're going to be talking about the difference between non-QM loans and conventional loans. So conventional loans, as you guys may know, is that's something that you get from your bank. It's a conventional type loan. You can walk into your bank, you can apply for that loan. And generally with those type of loans, you have to have usually excellent credit. They like to have, they don't say this, but ideally a 700 or higher credit score. They don't really work with 620s, 640s, 650s. They may try to say that they do, but it's going to be really hard to get a loan for conventional with those lower credit scores, okay? The other thing is that you have to have a low debt to income ratio. Your debt to income ratio generally has to be at 43% or below. No bankruptcies or foreclosures on your record in the last 4 years. No foreclosure in the last 7 years. You have to have 2 years of straight employment history to be able to document your income with either mainly tax returns, last 2 years of tax returns, and they're going to go off of the net income on your tax return. So if you're self-employed, you write a lot of stuff off, you just started a business, you're 1099, it's going to be extremely difficult to get a loan with that type of situation with the conventional financing. But there's some people, they still fit that bill. They've been at their job for a long time. They have A1 credit. They can walk into their bank, put 20% down, get a 3.5% mortgage rate, and they get a great loan. And there's nothing wrong with that. But there's millions of people, and especially as we've gone into more and more of the 2021, 2022 in the future, that a new type of industries are evolving, new type of jobs where people don't have straight salaried income. People get paid online now, right? They can do YouTube, right? You can get paid doing YouTube. You can get paid being an Instagram model, right? Well, that doesn't work for conventional financing, okay? So what are you supposed to do? You're not supposed to get a loan. You're supposed to rent for the rest of your life? No, that's not the answer. That's not the solution. So that's why the non-QM loan has come out as a opportunity for people that don't qualify for conventional financing. The biggest thing is it really caters to people that either the self-employed market, people that are self-employed, it caters to the investors, and it caters to people that have below a 700 credit score. So that area right there is perfect for non-QM, and that's the biggest difference between non-QM and conventional loans, okay? So you can go up to a 50% debt ratio on fully documented loans. You can do investor, no documentation loans. You can do self-employed loans with no tax returns, no W-2s, no pay stubs, just using your deposits and your bank statements. You can do a loan with just a 1099. You don't need a tax return. I get paid, on 1099, just use my 1099 to qualify, right? I know many people that are in that area in their career and they just get a 1099. So different sources of income, right? And so that's really where non-QM shines for that whole marketplace of employment class that has 1099s, that's self-employed, that are investors that have lower than a 700 credit score, but they still need funding. Now, the interest rates are slightly higher, usually about a 1% higher interest rate, so you're not going to get a 2% rate. You might pay 4%, you might pay 5%, you might pay 6%, but you're still going to get your house. You're still going to get your property, your deal will get funded. Now, you don't have to stay on that loan forever. You can move to a different program later on once you fix your credit or fix your employment or something changes, but at least it's better than renting and you can still get funded. They're 30-year fixed loans. They're not hard money loans. And they're really cool because it's thinking outside of the box. And we're one of the biggest, most prized non-QM lenders in the country. Like I said, you can call or text us at 431-6331. We want you guys to think about us. We love conventional. We do conventional. We do FHA. We do government loans. But we're really, really passionate about non-QM because we see it in the next 10 years, taking over market share over Fannie and Freddie Mae. So because we think that a lot of people, as we go into a digital technology era, that you're going to see a lot of income shift. People have multiple gigs right now. They have multiple flows of income. That's not going to work for conventional lending, guys. So non-QM is here. It's going to become the top dog. I'm a big advocate of non-QM. I love non-QM loans. So if you're somebody that's maybe self-employed, you're an investor, you're trying to buy rental properties, you're trying to cash out on rental properties, maybe you don't have a 700 credit score, maybe you have a 660 or 680, I want you guys to think about Angelo Christian and reach out to us. We're a nationwide commercial and residential lender. Like I said, you can call or text us at the number above, or click on the YouTube link in the description, and you can actually get signed up to get pre-approved. We'll respond to you right away to help you to get qualified for your loan. So I really appreciate you guys watching the channel. We want to help you with all your non-QM and conventional financing. And this was a video today to teach you guys the difference between non-QM loans and conventional loans, to educate you and empower you, to teach you so you know the difference. Please subscribe to our channel. Give us a big thumbs up on the YouTube. Share this with anyone you know that's looking to get educated on finance and real estate. That's what our channel does. We educate people. We empower them to teach them so they can learn and understand about finance. So thank you so much for watching Angelo Christian, and check out my next video. And thank you so much.